Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius and Anucauskas. Today is the 10th of December 2019, so welcome everyone. Welcome to this Tuesday's morning session where we're going to have a quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimers. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest, and we can continue. Okay guys, I do apologize for the small interruption of the stream. It seems that something happened here with the internet connection, but I hope you can hear me okay and you can see me okay as well, so we can resume. Now, basically, before we jump into the charts, quick mentioning of our JFD YouTube channel here, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, specifically our JFD research page, which we update on a daily basis, so that please feel free to visit us here on jfdbank.com and click on the tab Research, and it will take you to our page, which we, like I said, update on a daily basis, and I believe you can find something useful in there. But for now, guys, let's jump into the charts. Now, the first one I want to touch on here is Brent Oil. Now, after last week's OPEC meeting, we saw Brent kind of continuing to push higher. It made its way to the upside here, broke some key resistance levels, one of which was, of course, this little territory right here. Or we can even actually drag it all the way around here near the 64.25 zone, so roughly around there. It did overshoot it. It tested the level here near the 64.86 zone, and then kind of drifted back down. So in a way, previously what I had here on the chart was a nice parallel kind of channel here. Let me just quickly put this one on the chart. There we go. So this is what I've previously had here, and for now, guys, of course, we will continue monitoring this rising channel, and but given that we have kind of accelerated here a lot in the short run, there could be a possibility for a bit of correction. Don't get me wrong. Of course, we are still kind of targeting the upside, but maybe a bit of correction could be possible to see as well. But this level here is no longer valid because we kind of violated it last week and on Monday as well. So basically, what we're going to do here is we're going to keep an eye on some of these key support and resistance levels. So for example, on the downside, what we're going to do here is keep an eye on the 63.60 zone. That's basically the low of yesterday. A nice good drop below this would also place the price below the 21 EMA here on the 4-hour chart, and it increases the chances and could increase the chances of a further drift lower here, or should I say a correction lower. Because still any kind of move lower here still is seen as part of a correction because we are within a rising channel. Then of course some levels to consider here underneath could be around here, somewhere around the 62.72 mark, or even just slightly above that, near the 62.82. This territory here basically could present itself as a nice area of support, but again, we need to see a push lower, a drop below the 63.60 level before kind of examining the downside here. So that's why, guys, for now, probably be very careful here. Yes, we're not far from the upper bound of this rising channel, so in a way it also has got still room to move higher. So in a way, how you could play this one out here is keep an eye on the highs of yesterday near the 64.50 zone, roughly around there. A nice good pop above this could, of course, open the path towards the 64.86, 85 zone, which is the high of last week. And if that gets broken, then yes, it opens the path towards the upper bound of this rising channel. So for now, basically, again, I will probably say that overall we are still positive. The only thing is from the short-term perspective, in a way, we could see a bit of correction, but we will consider that correction only if we see a drop below the 63.60 level right here. If it stays still somewhere around here, or let's say continues to trade above its today's pivot, then keep an eye on the 64.50 mark. A nice good pop above this could bring the price above yesterday's high, and then we will aim for the last week's high, which, if it gets cleared, this would confirm a forthcoming higher high, and like I said, increase the chances of a possible test of the upper bound of the rising channel. So let's keep an eye on that one, guys. Bitcoin Cash. Now, haven't looked at this one for quite a while, basically, and basically it was just a fresh new chart. But what I wanted to show you, of course, that is after we've managed to drift lower here from around the beginning of November, the crypto is now stuck here. Excuse me. The crypto is now stuck here kind of inside a potential triangle pattern. Now let me just quickly bring this one up. So in a way, it's not an ideal one, guys. Basically, it's somewhere around here, or should I say, even actually, it's slightly below it now. But it's also below this little downside resistance line here, taken from the high of the 29th of November. But at the same time, like I said, it is kind of it is balancing near this lower side of the this short-term upside support line. So in a way, you can see that now the crypto is kind of trying to get out of this triangle. So it is kind of succeeding that, but it's just bang on the line. And for now, guys, we're gonna keep an eye on this one. Certainly, it increases the chances of a further move lower, given that it's kind of breaking this little short-term upside line. But in order to get comfortable with the downside, ideally a drop below the 202.75 level would be needed. Then we will aim for the lowest point of November near the 192.50 zone. But if that fails to withhold, now this would confirm a forthcoming lower low, and we could start targeting even lower areas. So for now, guys, be very careful, stay sharp. For now, it's a bit of a tricky one. So again, it's very close to this key breaking point here near the 202.75 level. But let's see if the bears can do it. If the bears can push this one lower. If they cannot, then we may see the bulls stepping in here, of course, logically, and pushing this one higher. The only thing is that for the upside, from the very short-term perspective, we'll consider the upside if we get a push above the 215.24 level right here, which is the high of yesterday. This way, there could be a chance for this one to drift higher further north. We will then consider a possible test of the 227 mark, which is the highest point of the, or should I say, the high of the 29th of November. And this is the area where the crypto could meet its 200 EMA on the 4-hour chart. So this is where we will remain neutral, because in a way, if it drifts higher, if it finds good, strong resistance around here and then reverses back to the downside, we might be getting ourselves something off a range here. But again, that's a bit too early to talk about. For now, probably keep your eyes on some of these levels. And let me just quickly mark those on the chart. So basically, for the downside, it's this one right here, the 202.75. On the upside, the 215 mark. That's what we're going to be looking at. And this is, by the way, short term. So don't look at this one as a long term idea. This is basically a short term one. So just to capture maybe a few moves here. Now then. Jumping into AUDJPY here right now. Let me just quickly bring the chart up. Bear with me one moment, guys. So AUDJPY here. So now then, yesterday I talked about this one, and I was telling you guys to keep a close eye on this 73.90 level. Now, for now, you can see that yes, we are still trading below this upside support line, but the level here, the 73.90, continues to kind of hold this area. All this area continues to hold. So in a way, we cannot really talk about the downside yet, although we do have a break of this upside line. But again, we cannot really talk about the downside yet until we get that break here. And even then, we could still be limited. The downside could still be limited near this area of support here, near the 73.47 or the 73.34 mark, marked by the lows of the 20th of November and the 14th of November, respectively. And of course, if that gets broken, if the low of 14th of November, or in other words, the lowest point of November, if that gets broken, then yes, further declines are possible, because this would confirm a forthcoming lower low, and we could aim for these much lower areas. Of course, one of the areas to consider could be around the low of the 14th of October, near the 72.97 mark. But that's before we could examine that. We need to see that nice good drop here below the 73.90 level, and only then we will aim for further declines. In terms of the upside, still the same game plan remains. We need to see a push back above the 74.54 mark here, and only then we'll slowly climb higher here. We'll aim for the 74.85 mark, and if that fails to withhold, then yes, higher levels could be met. But for now, it seems that the downside is a little bit closer. The downside idea is a little bit closer, but we need that confirmation break first. NZDCHF. Now, we haven't looked at this one for quite a while, and basically on this one here, of course, you can see straight away, we don't even drawing any lines. We are still trending higher. We are still trading above this little short-term upside support line. Let me just quickly put this one up. And there we go, roughly around here. So we're still trading above this upside line, and okay, not ideal. There we go. But after kind of finding good resistance near this level right here, and let me just quickly put this one up as well. So near the 0.651415 zone, the pair drifted lower, and of course, yes, we can see that the bulls are occasionally fighting back, but overall is now kind of sliding lower. The only thing is that this move lower is still classed as a temporary correction before another leg of buying, or should I say before another potential leg of buying. The only thing is that we'll be very careful here. It's at the moment, of course, it is quite overstretched here on the shorter time frame to the upside, so in a way a bit of a larger correction would be great to see, but again, until it remains above this upside line, we cannot really talk about lower areas, and that's why, guys, for now we're gonna keep an eye on some of these support levels. So basically, the yesterday's low near the 0.6456 mark, roughly around here. If we get a drop below this, then this is where it could become a little bit more exciting for the sellers, because this way, at the same time, the rate would be placed now below this upside line, and yeah, we could start moving lower. But again, until that happens, until we see that until we see those breaks here, then we cannot really assume that this could drift lower. For now, as long as it remains above this upside line, we need to stick to the upside. GBPJPY. Now, something to consider here. So overall, of course, and let me just get rid of some of these arrows. So overall, of course, yes, we are trading above this upside support line taken from the low of the 3rd of September. This is a little bit of a tentative one, but nevertheless an upside support line. But this is more of a from the medium-term perspective. So basically, from the shorter term perspective, and this is how we could look at this one right now. And by the way, again, guys, don't forget that we are going into election period right now, and in a way, of course, everybody understands that the conservatives might take the rulership. The only thing is that will they have enough seats? That's the big question. So in a way, how we could see this one right now is given the reason why it's accelerating higher is it's mainly because that the market already understands that the conservatives will win, and basically the conservatives are a positive outcome for the pound for now, because of the certainty that because it's already known that the deal is going to be approved with the conservatives, and basically less shocks for the British economy, unlike if we would get the Labour winning here, for example. So if the Labour wins, that would bring the British economy a little bit more into uncertainty, and basically this is where the pound could suffer. So in a way, if you see Labour winning, then I mean we could see a bit of a slide here, or maybe the word a bit would be not appropriate here. We could see a bit of selling off, and we could see the pound sliding lower. Now, if the conservatives win, the pound would not really skyrocket that much, in my opinion. Now, of course, because it's already kind of considered, it's already kind of taken into consideration here. The uprise that we're seeing, this is a reflection of the market anticipating the conservatives to win. So in a way, if when the outcome comes out, when the results come out and the conservatives win, so the market has was already taking that into consideration, and basically we wouldn't see a huge move. So in a way, from looking at this pair here, GBP JPY, from the technical perspective, we could see, and from the short-term perspective, we are seeing a nice upside support line here, tentative of course, but nevertheless an upside support line taken from the low of the 22nd of November. So in a way, as long as it remains above this upside line, we will aim for higher levels. But the only thing is that here at the same time, from the shorter term perspective, we do have ourselves a nice little triangle pattern here. So basically what it means that the pair is coiling up right now, and in a way it's waiting for that pop. So and this is what we're going to do as well. We're going to wait for that pop, either through or should I say a break instead of the pop. If we get a nice good push above the upper side here of this triangle, and the rate then clears this little high here, the high of last week near the 143.25 mark. If we do get a push above this, then yes, we will aim for higher levels. We will aim for the 143.75 zone, or even further north. And let me just show you what that level was. The 143.75 was the low of the 25th of April this year. So in a way, if that gets overtaken, then the next area to consider could be around here. And let me just quickly try to capture that little territory. So that's roughly around here, guys, and that's roughly around the 144.79 zone. So another good potential target, but again, we would need to see some breaks here first to the upside. So first, what we're going to be keeping an eye on is the 143.25 zone. So in a way, even if we see a break above the upper side of the triangle, still a break above the 143.25 level is needed. In terms of the downside, a drop below this little low here, an intraday swing low of yesterday near the 142.50. A drop below this could lead the pair towards a bit of a correction here, because again, we will class this move, anything up until this upside line could be seen as a temporary correction. So keep your eyes on this one. GBPNZD. Now this is a slightly different story here. GBP NZD. So NZD, as you've seen the chart, it continues to strengthen, and basically, but maybe it could be the time for NZD to retrace a little bit. But so that's why we're going to keep GBP NZD on our charts, on our radar as well. So in a way, for now, it continues to trade below this downside resistance line taken from the high of the 16th of October. But at the same time, you can see that it's recently started climbing higher a little bit here. So in a way, it's also coiling up, I would say, a little bit. So we're waiting for that clear breakthrough, one of our levels, in order to consider a further short-term directional move. So for the upside, what we're going to do here is we're going to keep an eye on the 2.0156 area, roughly around there. If we do get a break above this, then yes, we will aim for slightly higher levels. One of the levels to consider is going to be here near the 2.0297, or in a way you could round it up towards the 2.03. Slightly above that, we do have this little target as well, the near 2.0330. In terms of the downside, probably we'll wait for a drop below the 1.9956 zone, roughly around here, and only then aim for the for further declines here. So areas like the 1.9855 could be met as well, and that's the low of the current lowest point of December. So we'll keep an eye on this one, guys. So, but for now, we're neutral and just waiting for this one to make a move. Euro USD. Now, very quickly on this one, I'm not going to spend too much time on it, but basically, for now, you can see that the pair is kind of nowhere. Still the same levels remain that I talked about yesterday. So basically for the downside, the 1.1043 level, that's where we're looking here for in order to consider further declines. Or in a way, actually, let me guys readjust this level a little bit, because I think it has moved now and this is no longer going to be valid. There, one moment. So this is how it would be easier to play this one out here. So now in terms of the downside, at 1.1054.55 mark, that's what we're going to be looking at here. And in a way, if we do see a drop below this would also place the rate below all of its EMAs. Now there we go. This is probably a slightly better area to consider in the short run. So a drop below the 1.1054 could open the path towards slightly lower areas. We will then aim for the 1.1038 zone, a break of which could send the pair a little bit lower here, and then we'll aim for the 1.1025 or even below that. But in terms of the upside here, now with the upside here, again, this needs to be adjusted as well. This is likely going to be different from what I said yesterday, because again, looking at this picture, it's now changing a little bit the game. With the upside, we could start looking at higher levels if we get a push above the 1.1078 zone, roughly around here. So that's the high of yesterday. If we do get a push above this would also place the rate above the 21 EMA, above the 20 SMA inside a Bollinger Band here, and then we could target these higher levels again, the 1.1110 or the 1.1116 zone. So we'll keep an eye on this, guys. This is the little short-term idea right now that you could consider. So let's see which way that's going to will break out to. Don't forget, we do have some German ZEV economic sentiment figures coming out, so this might play out nicely with euro dollar, so keep your eyes on those as well. So yeah, guys, for now, these are the two levels to consider. For now, from the very short-term perspective, but we're not going to drag this one too much higher or lower. We're just going to keep it short and simple, and then we'll reevaluate everything again. Just wanted to quickly run it by you guys that tomorrow, well, I'm going to be on my annual leave, so basically there are not going to be any videos tomorrow, or till the end of this week, and basically for next week as well. So we will resume on the 23rd of December with my Traders Tea Time, Traders Espresso, yes, and of course today we'll still have the Traders Tea Time for, before I leave. And yes, guys, so like I said, please join me today at my Traders Tea Time, as always, 14:15 GMT. But in terms of the espresso, we will resume. I will resume on the 23rd of December, guys. So thank you very much, and bye bye.